Celebrate good times. Come on. Yeah, baby, raise your hands. Raise the roof. Celebrate good times. Come on. I am so excited, ladies and gentlemen. Welcome back to Strongman Personal Finance. My name is Christopher Belli. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And there are certain times, moments in my investing career when I get more excited than anything. And one of my favorite things is when the IRS publishes new 401k and IRA contribution limits. And a lot of people invest in like HSAs too, but I don't have a high deductible health plan. Anyway, as a long-term investor, somebody that is serious about building long-term wealth, you don't need to focus on watching YouTube stunk channels and trying to find the next stock that's going to 10x my Henhex. No. How you actually build wealth is your savings rate and not losing all of your freaking money on degenerate stock gambles, okay? And one of the best places to save your money is inside of a tax advantage account, like the 401k, which is provided by your employer, or the IRA, which is an individual retirement account. Now, there are tax advantages to the IRA and the 401k. They come in the flavor of traditional or Roth. You can have a traditional IRA and a traditional 401k. You can have a Roth IRA and a Roth 401k if your employer provides it. Either way, they provide tax advantages. And once you put money in those accounts, you reap the rewards of those tax advantages. And when the money goes in, you can potentially be taxed or not. And when the money comes out, you can either be taxed or not. But when you put your money in those accounts, what happens inside that account, there's no taxable events, okay? For example, I put money in my Roth IRA. Let's say I buy a stunk in my Roth IRA. I contribute cash to my IRA and I buy a stunk. The stock goes up by 200,000% inside the IRA. If I sell that stock, guess how much tax I pay? 0. The tax effects happen either when you're putting the money in or when you're taking the money out. But once it's in there, you don't have to worry about paying any tax, okay? But you should consult your financial advisor. Of course, financial advisor. Now, that's why I'm a huge fan of those tax advantage accounts. And ever since I started investing, I have been focused on trying to max them because you have a certain amount you can put in every year. And if you miss maxing it out, well, you miss that opportunity forever, and you have to hopefully make up for it the following year. But it's massively important for you to focus on maxing these accounts because when you hit retirement age and you can start withdrawing from them at 59 and a half, guess what? You're going to have potentially millions of dollars that you could potentially never pay taxes on again, or you have certain tax advantages. You need to focus on tax advantage accounts. That's why I get excited when I can contribute more into a tax advantage account than I could the year before. So let's go look at the changes and how much you can contribute to tax advantage accounts for 2023, okay? And a caveat, before you make any decisions about your taxes, you need to consult your CPA. I'm not your CPA. I'm not your tax advisor, okay? This is just me announcing information about changes to contribution limits. I don't know your freaking tax situation. I'm not your tax planner, okay? So don't take this as, I'm going to put all money in a Roth because Strongman does it. Go consult your tax advisor, okay? Anyway, 2023 contribution limits. 401k increases to $22,500. You can put up to $22,500 into your 401k starting in 2023. Do you really have that much money to invest? Are you putting that into Robinhood instead? Well, if you're doing that, you're a freaking clown, okay? And the IRA contribution limit for 2023 has gone up to $6,500 from $6,000. Woo-wee! So let's assume Strongman's a single guy, which I'm not, and I want to max out my tax advantage accounts. Well, to contribute to both of these, I would need to have a total amount of $29,000 to be able to invest, to max those out. Now, tell me if the average person has enough money to set aside $29,000 and put that into a tax advantage account. I would say the average person does not, but you should aspire to be able to contribute that much into your tax advantage accounts every year. And I would argue that before you do that, you shouldn't be doing anything else inside a taxable account, okay? If you can't put $29,000 away to save for your future, assuming you're going to use this money for retirement. If you need it before retirement, that's a different story, okay? There's a lot of complexity to this. If you have money that you want to save for retirement and you can't put in $29,000 next year, well, guess what? That's what you should focus on instead of putting your money in Robinhood and buying whatever stupid crap you're buying in Robinhood, okay? $29,000. Now, I'm excited because I can actually contribute to my wife's IRA, even though she doesn't work. So instead of being able to put in $12,000, which I did this year, I can now put in $13,000 into my IRA. Now, people ask me, why aren't you buying BABA? Why aren't you averaging down strong, man? You know, what's going on? I'm getting my money ready. I'm getting prepared to put in $13,000 total, half into my wife's, half into mine, into my IRA at the beginning of January of 2023. That's what I'm doing. And right now, I'm not going to spend any money on a freaking stock that could plummet when I want to put that inside my IRA in the next couple of months. Okay. So let's read this a little bit more. For 2023, the amount an individual can contribute to a 401k increases to $22,500, up from $20,500. That's $2,000 more dollars you can put into your 401k. The catch-up contribution for employees 50 and older increases to $7,500. So if you're 50 or older, you can put up to 30 grand inside of your 401k. That's crazy. Why would, if you're saving that money for retirement, why would you do anything else when you can reap the tax advantage rewards of doing that? And I can tell you, when I'm 50 and I'm hopefully making way more money, $30,000 is definitely going into my 401k before I do anything else. Because once it's in there, you've reaped the rewards. You can reap the rewards into the future, okay? For IRAs, you can contribute up to $6,500. Or if you're 50 or older, you can put in an additional $1,000. So if you're 50 years old, right, you could put in $30,000 plus $7,500. You could put in $37,500, assuming you don't hit all the phase outs and stuff. That's a lot of money, okay? You should be focusing your retirement savings on putting them into tax advantage accounts, okay? I've talked about the difference between Roth and traditional before, and there are phase outs that you need to be aware of. So before you start doing this, you should probably consult a CPA that knows your individual situation. But this is something to aspire to, okay? Now, if you don't have a 401k, which right now I don't. I have to work for 6 months at my new job before I get access to my 401k. What do? Well, that's up to you. What I'm doing is I'm contributing to a taxable account, okay? For the last year and a half, I haven't had access to a 401k, which sucks. But I'd rather invest and pay a little bit of taxes than not invest at all while I wait for my 401k, okay? But overall, once I get access to a 401k, which is coming up, I'm going to be funneling as much as I can. And I'm going to aspire to put in $22,500. And this, if the inflation keeps going up, this will probably go up more. So every month you're looking at, if you're under 50, you're looking at putting $1,875 into your freaking 401k. So per paycheck, that would have to be, if you're paid bi-weekly, $865, okay? Which is a lot of freaking money. But if you can do that, you're going to be successful. So this is pretty big. I get really excited about this stuff because this is what ultimately matters. How much can you sock away for your retirement into tax advantage accounts? That's what will lead you to success. Not buying stupid clown stocks and trading options inside Robinhood. That's nothing. if you get excited about this stuff like I do, you're on the path to success. I've been doing this for 10 years. Well, I've been trying to max my 401k for 10 years. I didn't start my IRA until a couple years ago because I was a freaking clown. But if you can max both, assuming you don't hit any phase outs with the IRA, you're well on the path to success. Okay. So this is huge freaking news. But like I said, you want to consider phase outs, and you need to really talk to somebody that knows your tax situation to be able to help you out. But overall, this is a big deal, and I'm very excited about it. Let's do some comments. So the 200% raise on that stock gets taxed once you actually start using the money. Well, it depends. If you put money into a Roth, you pay the taxes up front, and then it's in there. If it's inside the Roth, it goes up, you sell it, there's no tax consequences. And when you take it out, assuming that you hit all the you hit the age requirement and the 5-year requirement, you don't pay taxes. All the money that's in my Roth that I'm going to pull out once I hit 59.5, I'm never going to pay taxes on that again. So all those massive gains that I could potentially have over the next 20 years, 25 years, I'm not going to pay tax on it. Nothing escapes Uncle Sam. Yeah, if you put money in the Roth, you pay taxes up front. So yeah, they get their taxes up front. Can we get a strongman live stream reacting to Tattooed Chef earnings? Of course. Thoughts on them going bankrupt? I need to see the financials. Hi. Can you show us what 401ks actually invest in? Well, it depends on your company. So your company will have a 401k plan, and they will offer you certain investments in that plan. So it's not like the 401k is like this company that's investing your money. It's a plan offered by your employer that will give you options to invest in. That's what a 401k is. And the reason I don't have a 401k, my old employer didn't have a 401k, period. So I didn't have the opportunity to invest in one, which is why I had to put money in a taxable account, which sucks. But what can I do? With my new employer, a lot of employers have like these, you have to like work for them for 6 months or something like that. And then eventually you get access to the 401k. So once I have to wait 6 months, and then I can start contributing, which I will be doing. And once I can contribute, then I'll look inside the plan, see what they're offering, and pick the best choice that meets my needs. Probably a broadly diversified index fund, okay? If you're making over 160K and you put money in a Roth IRA, what can happen? Well, you have to look at the phase outs because it really depends on your situation. But they actually kind of break it down here. Let's see. Phase outs for Roth IRAs. For singles and heads of households, the phase out begins. So after a certain point, there's a phase out where you can't contribute. But there's also like ways to get around that. But like I said, you need to be careful, and you should consult somebody that knows your situation. For singles and heads of household, the phase out begins at 138 and ends at 153. For married filing jointly between 218 and 228. For married filing separately between 0 and 10,000. So depending on how you're filing and your income, you may have a phase out where you can't contribute to a Roth IRA, but there's the backdoor Roth. But like I said, you need to not, because you can screw this up pretty easily. So you need to consult somebody that knows your situation. So you need to be aware of the phase outs. And if you think you're going to hit those phase outs, you need somebody to help you calculate what you can actually put in. Okay. So that's kind of the phase outs that are in effect as of 2023. Is it bad that I have an IRA with Webull? I mean, I don't really know anything about Webull. I don't know. I mean, is it insured? Do you get access to HSA with your job? I haven't even looked into that. I have healthcare through the Army. Also, have you looked at Carvana stock? Makes Meta look tame. I'll look at Carvana. Why not? How do companies account for changes of intangible assets during earnings reports? Well, intangibles are amortized. So like a tangible asset is like a building. And then what you do is you buy the building and then you depreciate it over its useful life. And intangible, you have amortization. Some intangibles are not amortized, like goodwill. Goodwill is not amortized. The only way you can increase goodwill is by acquiring another company for more than the fair value of its net assets. But you don't amortize goodwill. You can write down goodwill as a loss on your income statement if you determine that it's not worth what you think it is. There's a whole process to impair or write down goodwill. But in intangible assets, like a trademark, there's useful lives, or there's time periods mandated by generally accepted accounting principles where you basically expense the cost of that intangible over a certain period of time. So it'll show up on your income statement as amortization expense. So that's how the changes are. Like, you'll see intangibles. If a company doesn't buy any new intangibles, you'll see the intangibles start to go down every single quarter. That's because they're probably amortizing it. They're expensing it over its life. Thanks for wearing a shirt. You're welcome. What's up, Bryce? Trump! I prefer taxable accounts. Easier to get your money out like next day and no fees. Well, it depends on when you need the money. Like, if you need the money next year, okay, maybe you should, I don't know, put it in a savings account or whatever you want to do. But my retirement savings that I'm not going to use until I'm over 59 and a half, those are going to go inside an IRA and 401k because I have the Roth option. I put the money in there, and when I take it out, I don't pay any tax for the Roth. Did you see me? Kevin is trying to change his lead. Yes, I don't care. Mr. Meat. Take it off. I came here for one thing and one thing only. Okay, if somebody gives me $100 super chat, I'll take my shirt off. I called Rich Cooper up at $3K an hour, and he taught me about finance. He told me to do the work and be an entrepreneur. Totally worth 10K of calls. Yeah, now I don't really watch old Rich Cooper anymore. I think he's kind of boring. But at least I've never heard him say this. I've never heard him talk about IRAs or 401ks. It seems to me all he talks about is crypto, bro. Just buy crypto, bro. So on top of being like this red pill clown, he's now, just buy crypto, bro. Guy's a freaking loser. This is assuming I make it to 59 and a half. Well, a lot of people do make it to 59. I mean, look at life expectancies. But you know what? If you want to invest in a taxable account, I mean, you can. I'm not saying you can't do that. But for my personal situation, I like to max my tax advantage accounts. Together, we will beat the ape father. Yeah! Down with the ape father. All right, I just wanted to announce the good news that you can now contribute more to your tax advantage accounts, which is ultimately what matters and what should excite you about investing, not whatever clown stock you bought inside Robinhood, okay? That's it. Cheers.